Hello everyone, I'm Kirti. I'm a student of BBLLB from Lovely Professional University. Today's my topic is income from house property. What is house property? A house property could be your home, an office, a shop, a building, or some land attached to the building like a parking lot. The Income Tax Act doesn't differentiate between commercial and residential property. All the type of property are taxed under the head income from house property in the income tax return. Meaning of annual value. Annual value of house property means the sum which might reasonably be expected to fetch if the property is let from year to year. What consists of house property? Property must be consist of any building or land apartment thereto. Essential conditions for taking income under this head. The following three conditions must be satisfied before the income of the property can be taxed under the head income from house property. Income includes monetary as well as non-monetary values of allowances and perquisites. All income is taxable under income tax unless expressly exempted. Income from other sources. Income received when in lump sum or in installment basis will be held liable to tax. The property may be used for any purpose, but it should not be used by the owner of the house or a land or a building for the purpose of any business or profession carried on by him, the profit of which is chargeable to tax. If the property is used for own business or profession, it shall not be the chargeable to tax. Ownership includes both freehold and leasehold rights and also include deemed ownership.
Gender Kun.
Ownership of the house property. It's is the only owner or deemed owner of house property who is liable to tax on income under this head. Owner may be an individual, firm, company, cooperative society, or association of persons. The property may be let out to be a third party either for residential purpose for business purpose. Annual value of the property is assessed to tax in the hands of the owner even if he is not in receipt of the income. Deemed owner. Section 27. Section 27 of the Income Tax Act provides that in certain circumstances an individual who transfer his property without adequate considerations to his or her spouse otherwise than in connections with an agreement to live apart. His minor child, not being married daughter, is deemed to be the owner of that property. If an individual transfers another asset and his spouse or minor child purchase house property from that asset, then such individual is not treated as deemed owner. For example, Mr. X gifts rupees 5 lakh to his wife and his wife purchase a house property from that rupees 5 lakh. Then Mr. X is not treated as deemed owner and income from such property is taxable in hands of his wife. Now, property used for own business or profession. The owner of house property is not liable to tax under this head if the property is used by him for his own business or profession. House property used for own business or profession. If a person carries on business or profession in his own house property, then the notational rental value of such property is neither treated as income or nor allowed as deduction. Generally, the income generated from house property needs to be shown under the head income from house property, but as the times, if the intent of real rental property is for commercial use, one needs to be shown under income from business. अगर युवा होगा ना composite rent for the house, rent for the facilities provided with the house rent. This is divided into two parts, case 1 or case 2. Rent from property, rent for services like water, gas, etc. And now it's generated from rent from property, income from house property, and other in second point, income from other sources. Now in second case 2, if rent is separable, rent from property, income from house property. Now the here charges of machines etc belong to the owner and income from other sources. In case 2, if rent is inseparable, entire amount shall be taxable as PZBP, income from other sources. It In this slide, we discuss about the exempted income from house property. For example, farmhouse, house property used for own business profession, self-occupied house, place of ex-rulers. Now, the maximum income tax deduction limit under Section 24 is rupees 1.5 lakh, and one doesn't need to particularly live in that house to be able to apply for tax deductions. Further, you can claim tax deductions on your income from house property if any of the subsequent situations apply. Under Section 24 of the Income Tax Act lets homeowner claim a deduction of rupees 2 lakh if you are filing returns for last financial year on their home loan interest. If the owner or his family reside in the house property, the entire interest is waived off as a deduction when the house is on rent. At last, the conclusion of this video is taxable income calculations. Income from house property includes rental income from letting out a house or a property. To calculate taxable income, one needs to subtract the municipal taxes paid from the gross annual value of the property. The conclusion of income from house property typically involves calculating the net value by deducting municipal taxes paid during the year from the gross annual value of the property. From this, allowable deductions such as standard deduction and interest on home loan, if applicable, are subtracted to arrive at the taxable income from house property. It is essential to ensure compliance with local tax regulations and seek professional advice if needed. Co-ownership and multiple properties. In case of co-ownership or owning multiple properties, each co-owner is entitled to their share of the income and deduction can be claimed accordingly. Thank you for watching video.